wrapping up here, John, two things. First of all, every investment has risks. I mean, obviously, and especially when you're exposed to development, there's the potential for risk, and we certainly had those concerns back in March 2020. We talked about. When you're looking from today moving forward, what would you say are some of the biggest headwinds that you're afraid of, or things that keep you up at night, or risks that could potentially derail your best intentions?
Yeah, I think, there's a number out there at any given point in time. And right now, I would say that, we're in an ultra low interest rate environment, and asset pricing and in desirable asset classes reflects that. And that's true of not only property, but, the stock market more broadly, and really all other asset classes. And what that ultimately means is that cap rates are at very, very low levels, and future returns are going to be harder to come by in a rising interest rate environment, which hopefully we're entering into, which signals that that we're in a growth environment again. It is going to be more challenging to generate the same level of returns as historically have been available, simply because of the starting point, so to speak. So that's something that we need to be conscious of. We need to really be conscious of the assumptions we're making on the tail end of projects with respect to the exit cap rate, or the valuation at which we trade out of a property, and we are applying much less future growth potential, if you will, to assets from cap rate compression. And in fact, we're underwriting at cap rates that are higher than where we're at today for disposition. But at the end of the day, we do believe that there's substantial growth coming, and in rents in particular, and that will offset some of the pressures that we anticipate experiencing over the next 18 to 24 months.
The other question, and wrap up with this, looking through the same lens, we talked about the risks. Where do you see the greatest opportunities, and what gets you excited about the upcoming years for ICM?
Yeah, where we see opportunity right now is as we've talked about, in both industrial as well as residential property types. We still believe that there's a meaningful amount of demand coming for those types of assets, and the ability to build into that coming demand is where we see a lot of opportunity. Where we don't see opportunity right now is buying existing in-place assets, simply because they're trading at values that are historic highs, and it's really, really difficult to justify an investment when cap rates are where they are. So we intend for the next 18, 24 months to be delivering new product to market, and then either crystallizing gains and through the disposition of assets, or refinancing properties and redeploying capital. And that's ultimately what you'll see from us.